Hey folks, welcome to Economic Observations. It is the 12th of July. My name is Chris. This video is sponsored by the Tanzania School Foundation, a nonprofit near and dear to my heart. Today we're going to talk about a question that somebody asked me in the comments, and it was about Jeff Bezos and his fair share of taxes. He said he hears all the time that Jeff Bezos should pay his fair share of taxes. And what do I think Jeff Bezos' fair share of taxes really is? It's complicated, and I'm no accountant. But from the way I see it, he pays taxes on his income just like everyone else. But he doesn't pay tax on the theoretical gain of his Amazon holdings, right? So, and this is really the kicker. So I did some research and I had some fun doing the research. So in 1994, Amazon was a privately held company, and Jeff Bezos owned 10,500,000 shares of Amazon, and it was valued at 0.001 cents. Okay, it had a total dollar value of $10,500, and in 1994 Jeff Bezos most certainly had to pay tax based on the $10,500 that he was given in stock. All right, so that's his liability for taxes. He was issued some more shares at 17 cents and 33 cents in the 1995 and 1996, and it wasn't until 1997 that Amazon went public. It was priced at $18 a share, and they issued 3 million shares with 450,000 additional shares. So it was like almost 3.5 million shares. Jeff owned 48% of Amazon at the time, and his privately held shares converted into publicly held shares. Okay, so now Jeff Bezos paid his income tax based on the value at the time of the receipt, just like anybody would, right? I worked for Goldman Sachs for 25 years. When we went public, we were given a few shares based on how long you've been there or formula, and it was deposited. They were restricted shares. You have to hold on to them for 3 years. You can't sell them. You can't sell them during earnings periods. You can't sell them during certain news coming out or whatever, because it was like classified as insider. But after 3 years, they were free and clear. Anyway, I'm saying this because when I got the shares, the price of the stock was $40 a share. So let's say I got 10 shares of stock. So it was based at $400, and I had to pay tax on the $400 valuation. If the stock went up to $300 and I sold them, then I would have to pay tax on the gain anywhere between $40 and $300. If I chose to give my stock and donate it to a nonprofit, remember, I run a nonprofit, so if I wanted to give those 10 shares of stock to the Tanzania School Foundation, I would not pay the tax on the gain because I didn't realize the gain, right? I gave it away to the Tanzania School Foundation. They received the $400 at, or whatever it was. If it was trading at 100, they received the $1,000. I didn't receive the gain. Instead, I would get the tax write-off for donating $1,000 worth of stock to a charity. And this is what millionaires and billionaires do. And we've all read in the news that Mackenzie Scott has been donating billions of her percentage of the shares. I think if they had 10% of the company, Mackenzie Scott got 25% of those holdings. So whatever it was, Jeff was left with 75% of what the couple owned, and Mackenzie took 25%, which was more than enough for her. So then she is donating the stock. She's not selling the stock and giving money to nonprofits. She's giving stock worth X amount of dollars to those nonprofits. And she gets the tax write-off for doing it, and the charity or the 501c3 nonprofits get the benefit from it. So there is no tax implication. Jeff is donating billions of dollars to climate change and various earth foundations. That is what he's passionate about. And there is no income tax or no taxes due because of the way the tax code is written in the United States. And it would be a monumental change because higher education and nonprofits all around the country rely on these mega donors to sustain them. And without those mega donors, the things that they're most passionate about wouldn't get done. So if Jeff Bezos is passionate about climate change, he can donate that $10 billion and hope that they put that money to exactly fighting that cause and following that mission. Mackenzie Scott donated to 276 various nonprofits, no strings attached, no buildings in her name. Spend it as you wish. Boy, Mackenzie Scott, if you are watching this video, please check us out, TanzaniaSchoolFoundation.org. We are struggling and we need your help. Anyone knows Mackenzie? Anyone knows Melinda Gates? Please tell them about us. We can really use their help. Anyway, to go on with this, there is no tax ramifications. So to answer your question, Jeff, the fair share of tax is exactly what he's paying right now. If Jeff were to sell $10 billion worth of his stock and buy a personal yacht or buy, a vacation home somewhere or an island in the Caribbean, then he would have to pay tax on that money because he realized the gain and he benefited from it. But if Jeff and Mackenzie are not benefiting from this, then there's no gain and there's no capital gains tax that's due. Hey, listen, any accountants out there, if I got this all wrong, let me know. I don't think I did. I know what nonprofits rely on, and we rely on people like them. All right, that's all I got. Have a great day. As always, it's a pleasure. Thank you so much for watching. As always, I appreciate you, and we will talk again real soon. Thanks again.